Today is Monday, May 16th. I want to take a look at two blue chips today, or actually you could call them former blue chips since they're not doing so well. American Express versus IBM. They have the same chart patterns, or very similar chart patterns, but yet one of them looks to me to be bullish and the other one looks to be bearish. So let's take a look and see how that could possibly be. It's really a tale of two stocks, same pattern, with subtle differences. Let's take a look. So here we have American Express. You can see the declining trend line from beginning or last year, end of 2014. And you can see unbalanced volume below. It may have a trend break in this study. I'm going to use the word may very emphatically because this is kind of subjective. Technically, yes, it's a trend break, but it's not that reliable at this stage. But anyway, take a look at the moving averages. Stock is above the 50, but still below the 200 on top here in green. And this horizontal line, I'm going to see in a second here when we switch to the weekly chart what that is. But first, I'll draw one more set of lines on here, some Fibonacci retracements. Right from here. Bring it down. And done. You can see, well, maybe it's a little tough for you to see. Here is a 38.2% retracement of that decline. And the peak a couple weeks ago was right there. So it did find resistance at that Fibonacci level. All right, let's head over to the weekly chart. See where that line came from. And look at that. This is about the 2007 peak. It's not perfect, it's not to the penny, but it's pretty close. So it's got big resistance happening here. So it looks like a breakdown and a test of that breakdown. So American Express, not great. And let's now check out IBM. First we'll put it back to daily. And here we have IBM with a similar type of trend line, declining trend line. This is from, I guess, third or fourth quarter 2014. So it's a very similar type of line. You have a similar type of pattern here. It does look like a bullish flag here. American Express had that sort of pause at the trend line, but this is a much more defined bullish looking flag pattern here, using the trend line as resistance. Breakout would be, of course, bullish. Take a look at the moving averages. It's above the 50-day average, which is rising, and the 200-day average is still falling, but this flag is happening right above that line. So that leans a little bit more bullish. And here on unbalanced volume, no trend break in sight. All right, let's take a look at that weekly chart. All right, I drew the line here. Yes, it's a little subjective. I drew the line here at the bottom of this congestion zone. So that would be a support level. Now, yes, you could argue to draw it at the 2008 peak, possibly the peak of this congestion zone right around there. But if you look a little closer in here, what's going on right there? Let's let this cursor calm down a little bit. See where it's pointing? That is the launching point for that rally that followed in 2010 and on. So that's why I like it. That's where all of a sudden things happen for this stock and people piling in right around there. All right, so you have a bounce off of this long-term level, which is acting as support. So I think that IBM has a much better chance of breaking to the upside rather than the downside. And American Express to me looks like it's failing after this nice early 2016 bounce. So there you have it. You have two blue chip stocks, both in the Dow. Similar patterns with subtle differences, making one lean a little bullish and the other lean a little bearish. So of course, you wait for the breakout. You don't act until you do get a break one way or the other.